Welcome to Graphite Hub's interview series, a series dedicated to all things graphite. And today we're joined by Peter Wright, CEO of Greenwing Resources. So welcome to the series, Peter.
Thanks, Harry. Thanks for having me.
Now let's kick this off, Peter. For those in the audience that aren't too aware of Greenwing, would you mind giving us a brief overview of the company?
Of course. We're a critical minerals company as our sort of core competency. We have a graphite mine in Madagascar that we operated pre-COVID, producing everything from super jumbo flake concentrates through to fine flake anode material. We have an emerging lithium project in Argentina. And then off to the side almost, we have a polymetallic asset in Tasmania that we've announced to the market. We'll look to separate from the critical minerals business over the course of this year. So we're a $25 million company, best part of $5 million cash and receivables. We're in an okay state. The last few years have been very tough on most critical minerals companies. It's hard when, lithium goes from sort of $90,000 down to $6,000 and graphite having similar challenges. So, I do think, though, that as a company and as a sector, we're beginning to emerge from what's been a pretty difficult couple of years, if not humbling as well, as one of the major shareholders of the company.
Yeah, no, agreed. And I think if I'm being honest, I've been in the graphite space nearly about 10 years, and I do remember Greenwing back in the day when it was under Bass.
Yeah.
I think it was like an orange logo or something like that.
Yeah, well, it's funny you say that, mate, because I was cleaning out my office today. I've got a skip bin out the front, so just getting, and I found the old Bass sign, and it was all fiberglass. I think I might put it downstairs.
Yeah, it's quite funny. I never would have thought that. Yeah, back in the day when I first came aware that I'd be sitting here chatting to you nearly 10 years later.
Hopefully this year you go there. We'll try and work that out.
That would be ideal. Get down there, see the site in Madagascar.
Yeah.
On the note of Madagascar, the Graphmada has been on care and maintenance since 2020. So what is the plan to bring that into production?
Yeah, look, it's a good question. And I suppose for a broader context, we operated the asset in its intended stage one capacity from 2018 to 2020. COVID came along. We made a decision that we had achieved largely our stage one objectives, produced, I think it was about 92.4% fixed carbon, so slightly off the specification, and 57% fine flake graphite, 43% flake and above, which is a pretty good outcome compared to some of our sort of sectoral peers. We had an unblemished sales record, no penalties, let alone rejections. We qualified into key markets, the US, Europe, sold into other markets, including India. So we really made the decision that with COVID, it made it nearly impossible to operate a mine. And having operated a mine, it is the most benign and abstract pieces of equipment that force you to shut down. And when you throw in, the severe logistical dislocation that COVID brought, we decided, okay, well, we'll pull up stumps there. Stage one was always intended as a set of platform to leverage into stage two. Yeah. So going from sort of 6,000 tonnes to 60,000 tonnes at 50% large flake and above 50% anode material. It wasn't until halfway through 2023 that we had any confidence that we could put staff back in the country. And a little bit longer than that, we were confident we could get them back. In that time, we took the resource. When we bought the project, initially it had about a 5 million tonne resource. That's now in excess of 60 million tonnes. We think we can get to over 100 million tonnes with a little bit of extra drilling. There's some really interesting stuff in the southern tenements in particular. The project remains under a mining lease, which is important. It is 3 kilometres off the national highway and about 120 kilometres from the country's main and only deepwater port. So logistically, it's in an ideal position. It's got qualified product. It's an established product. It's sold into most major markets under that broader umbrella of Madagascar graphite, which has a very good name.
Yeah. And then so more broadly, I think one of the key factors that's holding back some projects at the moment are graphite prices.
Yes.
What price appreciation, and not just specifically for your project, but do you think we'd need to see more broadly?
That's a good question. I sort of look at it a little bit differently. I think the strategic value of these assets and the supply chains that they underpin. At the moment, you have an incredible concentration of graphite concentrates coming out of China. in excess of 90%, which makes OPEC, look like a disorganized rabble almost. Like the disruption that China could cause to OECD economies and Western economies by withdrawing graphite. There's no Tesla cars, there's no Apple phones, there's no consumer electronics, there's no battery storage, especially with data centers. And a lot of those are going to be underpinned by a massive battery requirement. So there's a real disruption, I think, on the horizon and so the strategic lens that graphite's going to be viewed through, I think, is improving. It's not so much an issue of the price of graphite. I think it's going to be more of an issue of developed countries trying to secure graphite, and more so in lithium, to be honest, but I don't think graphite's far behind. We're getting a lot of strategic interest at a high level, but sovereign states just looking to put their foot on critical mineral supply 2000 and beyond, and beginning to understand the disruption to their economies without lithium and not too far behind at graphite.
Yeah, well, no, that's positive to hear things are moving in the right direction, and you are getting interest, I think. I think for the last few years, the market has been quite quiet in the critical mineral sector. So the fact that, you are getting interest is positive to hear.
Well, look, it's so binary. I've been involved in lithium in particular since 2010 with Altura. Back then we had to go to the lengths of trying to issue a freedom of information request to the West Australian government to get the spodumene royalty income and then try and back solve it to the price. But I've always found that industrial minerals markets get oversupplied and undersupplied pretty quickly, and they're really hard things to sort of solve. There's always this latent capacity in iron ore or coal. Iron ore's a 1.5 billion tonne market. There's always excess supply. It's not the case in industrial metals and lithium and graphite in particular. And I do strongly think in lithium and then followed by graphite that we are going into an undersupplied market, and that drives a particular form of behaviour from end users who don't really care within reason what they pay for a lithium or graphite asset because it's underpinning multi-billion-dollar supply chains. And I think the next iteration of lithium and graphite boom isn't going to be battery makers, isn't going to be automotive manufacturers. It's actually going to be sovereign states who are beginning to calculate what a supply disruption or a scarcity in lithium and graphite actually means for their economies, and already starting to see a bit of that now, which I find very encouraging, as an owner of lithium and graphite assets.
Yeah. What do you think is the turning point, though, for that to occur? It feels like over the last few years, there's been a few events that we've thought that was going to create more interest in graphite, but it just hasn't translated just yet.
I think the obvious catalyst would be a hard ban on Chinese graphite if they came out and in reaction to some of the punitive or otherwise measures that are being imposed on them, if they said, okay, well, one of the few levers that we have that we can pull is we'll withdraw graphite in its totality. So from Korea, from everywhere else, that would have an enormous impact on graphite prices.
Yeah. Yeah, and I think the one thing to note as well is, China clearly dominates the space with their mines in China, but they've also got their hand in a lot of graphite projects outside of China. So when you take those Chinese-owned projects outside of China out of the mix as well, there's not many companies out there that are actually producing or near-term producing.
Problem, and so we sit there, and just coming back to that sort of binary view of graphite and lithium, we sit there, and I think it's only a matter of time before we get viewed for what that asset is a large and growing resource that has produced to specification all commercial concentrates and qualified into most key markets and sold there without penalty or rejection. So, in the event of a supply challenged market, Graphmada sits there as a medium-term solution.
And then on the back of that, what is the timeline to get Graphmada back into production?
Well, look, I suppose the goalposts have moved a little bit. We've announced to the market that we're going to complete a scoping study this year, contemplating that 60,000 tonnes per annum. When I say scoping study, we operated for 2 years. We've got all the metallurgy, hydrology, everything. There's a lot of information there. So, but we want to do a high-level study on what 60,000 tonnes looks like, the refinements we could make to, drying and processing and transport, just efficiencies we could find. But ostensibly, if you get to a project size of 60,000 tonnes, split 50-50, conceptually, large flake and fine flake, having a single site, 30,000 tonne per annum, large flake and above asset would be of enormous strategic appeal, we think. So in parallel to the scoping study this year, we're looking and we've commenced the process of finding a strategic partner, and we think the environment and the context for that is improving and improving rapidly.
Yeah. Okay. And you talk about the 60,000 tons per annum. That is of concentrate. Are you looking further to go downstream, or are you mainly focused just on the upstream?
Oh, Harry, we had enough trouble mining the stuff, mates.
Yeah.
You know,
It's an honest answer that I think many companies probably wouldn't talk about.
yeah. I remember one of the first things I learned when I went to university was law of comparative advantage. I think our comparative advantage is the graphite-rich rocks close to the surface, the cost base in Madagascar. Even that, and credit to the team that we had at the time, borderline work of art to put those flakes at that size in bags and get them away. To refine that further, and the capital involved and the research involved, and look, our interest is in mining, getting to a 60,000 tonne per annum operation, and that's a big enough challenge for us. And if we achieve that, I think that would be adequate reward in itself. I understand the capturing margin argument, but mining is hard, and value adding to that is even harder. Been on several boards that have mined with Altura, Savannah, Greenwing previously. It is hard stuff. And as I said before, the most innocuous things can knock out your production, set you back for everything from the weather to, an obscure part worth $2,000 that can have you shut down for a month. It is hard. So the lessons that we learned were, A, we want a strategic partner, and B, we want to stick to what we know that we're a fair chance of being able to do successfully.
Exactly. I think a lot of these companies need to walk before they try and run.
Yeah.
The issue we're seeing, especially at the moment with the market, with companies wanting to move further downstream, and the challenges they're having, qualification, trying to raise capital, it's just a nightmare.
No, and look, I absolutely get the logic, and maybe there are people, there are a lot of people more capable than me that can maybe pull that off. But for us, our skill set as a board and as senior management, from James Brown to myself, we've run mines before, been on boards that have operated mines before. That's what we think we can do. And so that's really all we're contemplating doing.
Yeah. Oh, fantastic. And looking at the jurisdiction itself, Madagascar, would you mind just talking through what the political landscape is there?
Yeah, well, look, I suppose as a general comment, having been there the best part of 10 times, I've never felt unsafe there. It is a challenging country, there's no question about that. The relative wealth of Madagascar compared to Australia, that they literally, their economy for a similar population is about 3% the size of ours. And that manifests itself in ways that you couldn't possibly imagine, from life expectancy under 40 to the very obvious effects of things like COVID and the infrastructure. And, it is tough, but the people are legitimately remarkable people. They're happy. They're very resourceful, solve problems out of nothing. Really surprising. They're generally trilingual, very friendly. It's a largely, if not totally, unarmed country. There have been several changes of government since we've been there. I've never encountered or seen any sort of political violence. You contrast that with the CFMEU and other elements in Australia, they almost compare well. But look, it's clearly, it's not ideal having a democratically elected government removed. And some might say, well, the elections weren't democratic. He was the only person that ran. By and large, the international reaction has been pretty positive to the incoming government. The mines department in particular are a lot more proactive and are making all the right noises, which is good. The pathway forward to address that monstrous disparity in GDP per head between Madagascar and Australia, Madagascar and other countries, is coming back to that comparative advantage. Geologically, they are a remarkable country. They are very rich in resources, and if properly managed and properly, for want of a better word, exploited or capitalised on, their economy and the life expectancy and outcomes for their people dramatically improved.
And then, so staying on Madagascar, there's obviously several other graphite projects on the island. How does Graphmada stack up to these?
Look, I think we stack up very well. A, we're tenured. B, we have a record of production. So we're not talking about buried rocks in the ground that may or may not one day be permitted to dig them up. We're permitted to dig ours up, and we've done that. We've taken them down to port, which is only 120 kilometres away, an existing highway in name only, to be fair. We're in the northeast of the country where most of the population is and most of the infrastructure is. We're 3 kilometres off the national highway. It's the busiest road in Madagascar. We're 120 kilometres down to the country's second city, which is called Tamatave, about 3 million people. And we're almost ideally placed. We're 200 kilometres from Tamatave, from Antananarivo, the capital. So 2/3 of the way along the highway. The mine is 3 kilometres off the national highway, and then it is 100 kilometres roughly from the port. So we're very well serviced. That infrastructure is available 365 days a year, 24/7. We've utilised it before. We've got an established pathway there. It's tenured, and it's, as I said, I'm very sympathetic to some of the other projects on the island that are yet to receive the tenure or the appropriate paperwork that they need. And at the highest level, it is frustrating because the pathway to better life outcomes for the Madagascar people is the development of the mining industry, amongst other industries. And there is a lot of potential there in the country.
And then when we look more broadly at certain countries and governments that could be supportive of critical minerals, are there any countries, like let's just take the EU, for example, that have any policies in place that could support the development of Graphmada, or maybe the US?
Yes. So look, I've seen that the EU have had some interest in existing projects in Madagascar. The US in particular is starting to pass a lot of legislation, aimed at securing critical mineral supply 2030 and beyond. Graphite is their number 2 priority. They are acutely aware of the issues facing the graphite industry and the potential problems and disruption that can come, without having sourced ex-China supply of graphite. Those same problems afflict the EU and Japan. All 3 jurisdictions classify natural graphite as a critical mineral, which, is very encouraging. I do think it's only a matter of time, having been through several cycles over the last 16 or 17 years in critical minerals, before some of these facts start to get a bit of traction.
Yeah. No, we need that black swan event to create that interest. And it feels like we're getting close.
Yeah. And look, I noticed with interest, it had a particular relevance for our Argentine project, but the US on consecutive days, February 4 and 5, firstly signed a reciprocal trade act with Argentina and then signed a Critical Minerals Act. And that was solely aimed at setting a platform for US investment in Argentine lithium. And I think that's just the first of many cross-jurisdictional agreements. The US has an enormous presence in Madagascar. The US embassy or installation is one of the bigger buildings in the country. It's huge. There's a US international school there. They're very comfortable with Madagascar. And I think it comes back to what I said before. There are limited sites globally that are that prospective for critical minerals, and certainly graphite in Madagascar and a host of other minerals. If the right framework was set, it could be mutually beneficial and solve a lot of problems.
Yeah. Okay. And then looking ahead to the next 6 to 12 months, the scoping studies underway at Graphmada, what else could we expect to see come out of Greenwing?
Okay. Yeah. Well, that's a good question. So and slightly off topic because we do have 2 other assets, but we've tabled a scoping study for our asset in Tasmania. A little bit like Graphmada, that's previously been mined. So it's under a mining lease sitting next to an operating mill and 12 kilometres from another operating mill. The high level, and they are scoping study economics, but was delivering about $110 million free cash flow to the company. In parallel to that, there is a really interesting industry unfolding and emerging in Tasmania around data infrastructure. So at Q River, you've got, in addition to the stage 1, what we're contemplating, then mining the open pit, and it's only 660,000 tonnes. And we're just mining it. We're not processing. We do third-party processing, but The bigger opportunity there is data infrastructure. There's 250 megalitres of water. It's a 30 megawatt substation there. It's cold, it's remote, there's fibre running to site. So there is real scope to add some value there. In Argentina, we already have 1 million tonnes at San Jorge. We're one of 23 salars only in the lithium triangle. We're one of 4 companies that own a salar outright. 2,600 hectares and 36,000 hectares surrounding it. So I've locked up the entire basin. There is an emerging acute concern around the supply of lithium. The lithium triangle, where the project is to lithium what the Pilbara is to iron ore, what the Bowen Basin is to coking coal. It is the best site in the world. We have an enormous footprint there. We didn't get the work done that we wanted to before lithium sort of retracted from $90,000 to $6,000 a tonne, but we made a great start there. There's 1 million tonnes. The most prospective parts of the salar and the extensions are untested. So, and then to Graphmada, we think that we get a fair way along getting a strategic investor this year. We publish a scoping study, and I think all of it comes back to probably my initial comment that, we are a $25 million company with, we've done the first stage of our capital raising. The conditional stage is yet to settle, but it will leave us with $5 million cash, extremely well funded, 0 debt, 3 projects. Graphmada has supported on its own sort of an $80 million market cap previously. With San Jorge, we've been as high as $130 million previously. And now the work we've done at Q River and the potential, I think, to create some real value there, firstly with the open pit mining, which would only take us 12 months, and then leveraging into a broader opportunity around data infrastructure and the demand for these centres contrasted with the available sites that have things like 240 megalitres of water, a substation. Q River, you need it to be cold for data infrastructure. The highest average temperature in any given month is 12 degrees. It's cold. It could be New Zealand.
Yeah. Wouldn't want to be living there.
No, so it we're not saying that we have all the pieces of the jigsaw, but we've got some pretty big pieces there. And we think the best thing is to spin that asset out, go back to what our core competencies are, which is lithium and graphite, but potentially with a really material sort of value outcome for shareholders. And I think it contrasts very favourably with our market cap, our cash balance. We don't need to raise money anytime soon or anytime in the next 12 months, really. So we're well positioned now to go and add value to the projects, and that's what we intend on doing.
Yeah. Well, no, fantastic. It sounds like things are happening, and appreciate your time today, Peter. And
Thanks.
hopefully, as we said, hopefully get down to Graphmada at some point in the next couple of
Mate,
months
look,
and can check out the site in person.
Yeah, I'm going to go, and when I go, I'll send you an invite. That's fine. I'd love to have you there.
Well, thanks everyone for tuning into this episode of Graphite Hub's interview series. We'll see you next time.
Thanks, Harry.